Let's bring in Ayako Yoshioka of Wealth Enhancement Group as we continue our conversation. Aya, welcome back. It's nice to see you. So what's your view here, right? So Nvidia delivered everything that we could have ever asked for again, and yet we have an uncertain market heading into tomorrow.
Yeah, hi, Scott. Nvidia definitely had a high bar going into earnings, and they did deliver. So the pullback, as Joe mentioned today, is really, because of the bond market. The bond market is really driving this reset in valuations, and it's really going to be about time. How long are we going to spend at whatever the terminal rate ends up being? So it's no longer about the level and more about the time.
I'm wondering about Nvidia as we watch it, and we're going to track it over the next 45 minutes and see if it closes in positive or negative territory. You wonder if it's if the stock does have a pullback of any size, whether it gets bought. And then the other question is what it really means for the other mega caps, because all of the mega caps went up, and they went up even more after Nvidia delivered what it did last quarter. But now you have to ask the question whether Nvidia's gain is Nvidia's to enjoy itself, and whether those other stocks are going to be able to continue streaking with Nvidia. What's your sense?
Well, Scott, on Nvidia's earnings call, they mentioned how it was the hyperscalers. It is Microsoft and Amazon and Google Cloud, purchasing a lot of these AI chips. And so I think the benefit is really going to accrue to all of us who utilize the cloud. The productivity gains that we're going to have in years to come are still going to be there. And so I don't think you can kind of just detach it and say that Nvidia is on an island by itself.
I didn't think that the market was going to be down today, to be honest with you, after what Nvidia did deliver in overtime. What does that tell you about where we might go from here? I don't know what the Fed chair is going to say tomorrow. None of us do. We don't know what rates are going to do. But is it an ominous sign in any way to you that Nvidia knocks the cover off the ball yet again, but the market doesn't look like it did last time?
No, I think it makes sense. Again, it's a valuation adjustment. Everything starts with the cost of capital. And so when interest rates are high, you have to adjust for that in valuations. And so, multiple expansion has been the name of the game this year. And so for multiples to come back a little bit, despite the fact that Nvidia really blew it out, it sort of makes sense, especially where we were at the end of July. This sort of August retrenchment makes sense to me.
How about you, Joe?
Well, I think overall right now, first, it all begins with this battle that you have. You have hedge funds and speculators that are short the Treasury market. They've been vocal about that. They've told you they're short. They're pressing up against the Federal Reserve. On the other side of that, the asset management industry wants to get long duration. They think that there's value that's being realized in the corporate bond market. So I just look at that battle as needing to be resolved one way or the other, and I think the equity market takes its lead from that thereafter.
Aya, what part of the equity market, just to play off what Joe's saying and to wrap it up, looks the best to you right now?
We still like healthcare in general. I think healthcare has a lot of characteristics to it that can provide growth, as well as some defensive characteristics as we go through the near-term gyrations of the market.
Aya, we'll see you soon.